going to dive right into the next topic, which is sort of a subsector, I would say, of fintech, but also an incredibly rapidly growing and quite an innovative, fast-moving sector, which is Insurtech or insurance tech. For that, I have the great pleasure to also invite Florian Graillot, who is an investor in the Insurtech space, but also quite an expert when it comes to European Insurtech space. And also the pleasure of inviting Jean-Charles Velge, who is the co-founder and CEO of a company in Belgium called Qover, a very innovative insurance tech provider as well. So please join the virtual stage if you're ready.
Hi, Robin. Salut, Florian.
Hi, Jean-Charles. How are you doing?
Excellent.
Hello to the both of you. Florian, I have to admit, I'm going to rely a little bit on you to help me moderate this session, because I honestly think you're much more of an expert on Insurtech than I am. Every year, you very kindly agree to give Tech.eu sort of your statistics and your research that you do on an annual basis. So maybe before we start the discussion, can you maybe summarize what the Insurtech space in Europe looks like today compared to when you started keeping those statistics in the first place?
Yeah, thanks a lot. And thanks again for this regular opportunity to share KPI on what's happening. I believe that a lot is happening, and Jean-Charles will be very specific about one trend, which is kind of popping out right now, but maybe to give the big picture about Insurtech right now across Europe. So first, this is a growing market. Last year was a kind of incredible year. The first reality and the first trend that I think everybody should have in mind is that if a lot of money was invested last year, money was highly concentrated in a few deals. So very huge deal. You may remember about WeFox, which raised 500 million or something like that. So that's kind of crazy. So that's the first thing. Only the more mature startups in that space manage, let's say, to raise crazy rounds, which are driving this kind of $2.5 billion that were invested in Europe last year. Maybe a second point, which is a bit earlier, but popping out, and that will make the link with Jean-Charles, is that if distribution has always been the most active part of the distribution of the value chain in insurance, almost since inception, there are always over half of the rounds announced every year, which are around distribution. Nevertheless, there are not only now direct distribution startups like Bought by Many for pet insurance, GetSafe for multi-product, Luco for home insurance. There are also tools for incumbents. So here it's Plus Simple in commercial lines, for instance. And there is a growing trend, and I hope that we will have a sense of it and a few figures after that, but it's around embedded insurance. And I highlight that trend because I believe that it's not only a buzzword on social networks, that's what we hear among incumbents, that's a growing reality, and especially growing among, let's say, platform, e-commerce, and website. And I believe that this is very interesting to have Jean-Charles and Qover around the table to share a bit more about this. And maybe last topic that we just to mention the third trend, which is around new risks. So there is one which is quite obvious right now around cybersecurity, but there is something around freelancers, so new way of working, data privacy, IT based on time. So a lot more to address around insurance, and that's where I believe Insurtech could be helpful to insurance companies.
What a fantastic summary, Florian. Thank you so much. What I take away from that is that there's lots of innovation happening in space, still quite concentrated in a few companies when it comes to investment so far, but lots of opportunities still ahead when it comes to Insurtech in different places, different markets, and different stages of a business. JC, I really, really appreciate that you joined us because I think you're still on paternity leave. You just became a father as well. So thank you for taking the time. JC, Florian already sort of gave away the fact that Qover is a very embedded insurance tech product, but maybe you can give a bit more details about what you do.
Yes, sure. And agree, Florian, with the summary that you've done. And I think what's important to mention is that Insurtech, we're really in the first days. Okay, Insurtech started 4 or 5 years ago, Qover was one of the pioneers, but again, fintech is 15 years old, and you see where fintech stands today, and what I say since the beginning of Qover, and I think that will certainly materialize, is what happened in fintech will happen with the vengeance in Insurtech. I think this can go really, really fast and really, really far. What we do at Qover, and the very simple pitch of the company of Qover, is to say that tech is not a vertical in the economy anymore. Tech is a horizontal that goes through all the verticals of the economy, right? And all the winners of that tech horizontal, well, all those people, all those companies need insurance, either to embed it, to enhance their product or their service, either to cross-sell, upsell insurance. And for them, all those tech winners, insurance need to be two things: digital and cross-border. And if you look at the legacy industry, they're fundamentally not digital. They're very sketchily so. And secondly, and maybe even a bigger problem for them, they're fundamentally local. Okay, meaning that an Allianz is Allianz Brussels and Allianz Paris. It's two completely separate companies. Even the CEOs don't know each other. And so what we've built at Qover to cater to that problem is an insurance platform, okay, that can do any vertical, okay, of the new economy, anything that is non-life, P&C, but also cross-border. And so we built very large insurance programs that work via API for all the countries in one go. And typically we do all the insurances of Revolut in 32 countries. But we do that for e-bikes. We're going to be probably one of the biggest e-bike insurers in the Western world in a couple of years' time now, but we have the product. We do that in motor, and we do that in the gig economy. But so it's really giving the ability to tech players to embed insurance into their product offering, okay, at scale, fully digital, across all their geographies. And there you leapfrog the insurance companies in two ways. One, you do it fully digital, with a great customer experience and great claims experience. And secondly, obviously, it's cross-border, so it's one insurance solution. It just makes sense to use it.
Yeah, super interesting summary from you as well. JC, something I don't think you know yet is that my father did work in a very incumbent insurance company for most of his life, so I can kind of sort of relate to the slowness of innovation from the incumbents. But it also sort of begs the question, because if you look at fintech, originally fintech was sort of building technology for the financial services industry, and then it sort of
fin, right?
Yeah, fintech, but it also became sort of fin for tech, right? Because you build sort of services sometimes that go against the incumbents rather than for, or as a partnership with. Is the same happening in the insurance or in the Insurtech industry, where essentially you have to partner with the big insurance companies or the reinsurers, or can you go around them and really innovate outside of that? Whoever wants to take that.
I think, and Florian, you can give it a go. It's a philosophical question about Insurtech, right? And you have people that do tech for insurance, okay? If you take great companies like Shift, okay, they build AIs for claims, okay, to prevent fraud. But that's tech for insurance. And there's tons of business models that work really well there, where you're basically like a SaaS, that you sell to insurance companies. So that's one side of the spectrum. And another side of the spectrum in insurance is the D2C players, okay? So you build one product, okay? And then you push that product very hardcore through Facebook, through Google, and so forth, and you start selling a lot of insurance. That's been a bit challenging for the last year because of exploding CACs, basically, and loss ratios. So let's see where that model goes. But D2C in insurance online is not the easiest one. And then you have the embedded part, okay, where you really go. And without acquisition cost, you put your solution at the point of sale, and you start cross-selling insurance. And I think there is a lot to be done there. Do you work with incumbents or not? Yes, of course, you always do. That's the model of insurance, except if you go for your own full stack insurance and you have your own balance sheet, which we don't do at Qover. We work in partnership, and we are basically the brokers, the tech brokers of the traditional industry.
Okay, and if I may add something here. So first, I believe that there are two ways to look at the embedded insurance opportunity. So the one that we are discussing here, which is, by the way, growing, it's coming from the market. Again, that's the platform, the marketplaces, the e-commerce websites, which are interested in embedding insurance or adding or upselling insurance product in the customer journey. And then they need insurance capacity. So first they come to an Insurtech company, which try to connect to the right insurance capacity. The other side of the same coin is around open insurance, and it's rather incumbents trying to API themselves to be able to distribute their product through any kind of platform. Obviously, that second part and second side of the coin is a bit slower and is growing obviously slowly than the first one. But maybe to come back to Insurtech or tech for insurers, I believe that there was a very recent move in the market, which is quite interesting, is that it happened in France, but it could have happened almost everywhere. Alan, which is a full stack player, and Sena, which is another full stack insurance carrier, both launch a kind of SaaS business model. So Alan, which is doing health Insurtech in France, used to distribute directly to SMEs and enterprises, and is now licensing its technology as Alan as a service. And Sena used to promote itself as the new insurance for pocket product and embedded as a whole. And they are now advertising themselves, if you go to their website, as a tech company for agents and brokers. So I believe it's quite interesting, and it's even more interesting when you remember that WeFox, at the very beginning, was a tech solution for agents and brokers. And then they got the insurance license by acquiring one. They are now a single company, an insurance company, still distributing software to existing distribution channels, but being a carrier themselves. And I believe that most of the close to 100 million euros of revenues they are doing every month is coming from selling insurance product. But the technology is just a way for them to be plugged to most of the distribution channels right now. Again, embedded, I would say, could target 10-20% of the market, which might be, or which might sound very limited in terms of percentage, but applied to a 1,300 billion euros market in Europe, I leave you make the computation. It's a huge market already, and it opens door to make big companies, even again, if it's 10 or 20% of the market.
Yeah, small slice of a really, really big pie. JC, did you have anything to add to that before I move to the next?
I think it's a very good point. Again, I think there will be the MGA models, okay, where typically what Qover does today, where you work with incumbents that will lend you your balance sheet, but you basically act as a digital native insurance company without a balance sheet, meaning you do everything. You do the product, you do the pricing, you do the wording, you do the legal framing, you do the tech, the flows, you go and get the customer. So you take the full value chain and then you put it on a balance sheet. I think that's one model that is very capital efficient. But now you have other models where you don't depend on things. So history will tell, and I think all the models will live next to each other and all have their good and bad parts.
Yeah. Something I've been always meaning to ask to JC, because when I look about the embedded banking, for example, products, and some of them we've actually had on stage as well today. Some of them don't want to become known as a brand to consumers. They don't care. They're sort of a white label service or reseller or whatever you want to call it. They're sort of the middleman. Qover doesn't need to be a brand for consumers, does it? Right.
No, we are B2B.
Sorry, I think, JC, we lost you for a second there.
Okay. So my brand is there for the carriers, and my brand is there for my B2B and B2B2C partners.
Gotcha. Okay, but doesn't that also sort of bring challenges, because you sort of want to build a brand of credibility and trust, because it's it deals with people's Money deals with people's sort of emotional situations when it's like house insurance or health or pets. These are all very, very inherently personal things. So why not try to build a brand around that, like Alan is doing, for example?
Like Alan did. Again, I think D2C in insurance is not what Qover is about. We do typically a lot of, let's say, to take a simple example, bike brands. Okay, then it's white labeled to that bike brand. And so you will take, typically in Belgium, we have Cowboy that you know very well, Robin. Well, then it looks like a Cowboy insurance. Okay, and the B2B brand Qover is used to show to our partner that we are actually the best ones to take care, to give the tech solution, to give the insurance solution, but also the claims to them. And so our brand is for the B2B indeed.
Yeah, makes sense. Florian, did you have anything to add?
Yeah, I think that the point that you highlight around claim is the next challenge, I believe, for the embedded insurance opportunity, because it all started with distribution. And by the way, here there are two models. There are the pure embedded, which is basically you put the product in the customer journey, and I believe that Qover you have also that model, which is, by the way, the insurance product is by design subscribed and purely embedded into the service. So I think it could be the case for bank insurance, for instance, when you have I don't know,
yes,
it's a blue or red card, then by design you get an additional insurance policy, which is another kind of embedded, where the customer, let's say, purchase the whole experience. And here I believe that the platform is seeking additional services, not only additional revenues, because most of the time, or maybe they are paying for that additional coverage. So that's the first point. But I believe that beyond distribution itself, there is the challenge around claim management. Again, if you believe that insurance is not only adding revenues and margin for this kind of platform, but also improving the customer relationship, obviously come the claim question, because that's the key moment in insurance where most of people are, let's say, churning. So that's a challenge for platform, and happy to get your views, JC, as well. But we see a few platforms which want to get the flow anyway, and then they choose whether they want to provide it to a claim manager, if they want to deal with the claim themselves with additional services and so on. So I really believe that there is something here. It might stay in the hands of the embedded Insurtech company. It can purely come to the insurance player, the carrier, I mean, or it can stay at the platform level, or obviously it could be a mix of the three. But that's the next challenge, I believe.
Yes, I agree with you. And claims is the moment of truth in insurance. It's the only moment where you really face your customers. But what's really interesting is that for many platforms, adding insurance is a very important part, because it gives them the ability to keep a relation with their client. Okay, instead of selling something and then the customer goes and you don't see him anymore. Well, because there is a relationship with the insurance at the moment when it's difficult for them, it's a great moment to reconnect with your consumer and to give them. So it's very important that you handle those claims as well as possible. My experience is, and we've worked with many different, it's difficult to have that super level of quality if you don't do it yourself. And so at Qover, we are insourcing now most of the claims, nearly all of the claims, but we do that centrally from Brussels for most of the European countries.
Great. And
so it's bringing claims back, but then not decentralize it, re-centralize it in one country to do it at the same quality level for all the countries.
Yeah. Florent, you have to excuse me, but I didn't actually properly introduce you, because you're not just an expert in Insurtech, you're also an investor in Insurtech. So I'll give you an opportunity to talk about your work at Astorya as well.
Yes, so that's our core activity. And by the way, all the knowledge that we are gathering is coming from what we see on the market. And as a seed investor, meaning that we are investing very early in a startup journey, we are able, I believe, to spot trends before they become mainstream. I believe that embedded insurance, for instance, is an example. We have invested in that space, by the way, in Spain, not in Belgium, but in Spain, with Qover. And maybe to highlight one point which we strongly believe in at Astorya is around new risks, which I mentioned as a growing trend in the Insurtech space. We have invested in cybersecurity, we have invested in weather damages, we have invested in IT based on time. Every time it's the same pattern. We invest in technologies that could benefit insurance companies to address this risk. The rationale behind is that we believe that incumbents struggle to attract talents. That's the first point. And around these new/growing risks, there is no historical data. So the challenge here is to access data, leverage this data, and get sense of this data. And we believe that startups here are more relevant to make it happen. Hence, we invest in this kind of tech teams, which then will sell their technology to incumbents, being insurance company or reinsurance companies. And by the way, this raises a challenge that we see right now on the market. Everything that we are saying around new risk or embedded insurance, and more generally, the model that you raised, tech for insure for tech, raise the point that at the end, the job of any insurance company might be only carrying risks, which is, by the way, the current job of reinsurance companies. So we expect to see more and more competition between insurance company and reinsurance company.
100%.
Yeah, and it already happened. Look at Munich Re, very active almost since inception. Since the beginning of Insurtech in Europe, they are investing and partnering with companies. In the US, at the end of 2020, it was $1.5 billion of premium that were directly held from Insurtech reinsurance companies. 2 years before, it was zero. So 1.5 billion in the US market seems nothing. But again, if you consider that 2 years ago it was zero, it's growing fast. Yeah. And in France, again, we have Qover, which is a tier one insurance company, trying to acquire a reinsurance company for months, if not years. So which is, I believe, a proof that there is something here.
Yeah, I mean, fantastic that you just mentioned that, because I was going to say that sounds to me like a recipe for consolidation. Because at the end of the day, if they cannot attract the right talent and they can diversify and they watch all of these innovators in this space moving a lot faster than they are, it seems to me that it makes sense for them to consolidate their positions.
The thing is, I agree with you, it's that the insurance industry, the way it is structured now, is fundamentally inefficient. Because you have giant balance sheets, okay, which are the reinsurers behind. And then you have locally all those branches of the primary insurance, okay? And there is very little synergy, or actually negative synergies between them if you try to do it across different geographies. And so it makes a lot of sense that at one point is for the embedded programs and for cross-border programs, and that's where the market is going. I'm convinced of that it's actually the reinsurers looking at it. And then you have a very efficient model where you have a giant balance sheet behind that can cater to all the product lines in all the countries, and very dynamic insurtechs upfront signing the players of the new economy and doing this digitally. And so that's the vision of Munich Re that had in the beginning. I think that's still very, very valid and will continue to grow. And as you say, we've seen it in the US and it's coming here also.
Great. One question that I had as you were talking about this embedded insurance journey, who owns the customer here? Who owns the customer data? Who owns the customer end revenue? And how do you build a relationship with a customer, if you even need to?
In the pure embedded, you don't own the customer as an insurtech. That's a question, okay? It gives you the opportunity to have many different lines and many different stuff, but it's your partner that actually owns the relationship with the final customer. So that's the reality of embedded insurance.
Well, thank you for being very upfront, because whenever I ask this to embedded banking providers, they dance around it. They say we own the customers, even though I know they don't. This somehow seems to be a bit of a taboo in this world.
Well, it's not black and white. Huh? There's a gray middle here, but it's not like a D2C company where you own the customer and you can you can cross-sell as much as you want. Here, there's boundaries because it's what you negotiated with your partner. Some partners are very open to it, some less, and so forth. So it really depends.
Yeah, and I would add that it raised the real challenge around Insurtech and more generally innovation in insurance. If you are, let's say, building the next insurance generation, the challenge is not to be the center of the ecosystem, is to be part of the ecosystem. And I really believe that this is the thing that incumbents should get. And when we discuss about API, when we discuss about embedded insurance, when we discuss about ecosystem, it's always the same. And by the way, that's the question that you raised. Okay, do I want to share my data with, let's say, adjacent player who is owning the customer? But at the end of the day, the real challenge is to be somewhere on the value chain. And we see a lot of examples where this kind of adjacent player, the platform I mentioned before, are, let's say, grabbing more and more of the value chain, which again raise a challenge for incumbents. So it's rather, okay, I'm part of the value chain, whatever the amount, am I let's say the owner of the customer, the data, etc. If you take every question, you can really challenge it. If you take the data challenge, look at the data that your insurance company knows about you. It's really poor, or it's not. It's very far from personalized, which is a huge gap with the banking industry, where, by the way, your bank account says who you are based on the transaction. So it's really easy to get who you are based on your banking transaction. Hence, I believe the open banking regulation, based on the declarative data, very poor that you shared with your insurance company for your home or your car. It doesn't say anything about who you are. So this point, for instance, is highly challenging. But long story short, I believe that the point for incumbents and for Insurtech is to be somewhere in the ecosystem, because that's, again, the market is big enough to build very big companies, having even a small part of that ecosystem or that market.
Yeah, that seems to be the direction that the industry is heading for sure. We only have about 4 minutes left. 2 minutes for Florian to explain to me, because you, as an investor, you sort of see the hot spaces and you meet all the sort of innovators. What are some of the spaces that are left unaddressed? What are some of the things that are really ripe for disruption, but not enough entrepreneurs or companies doing something?
Yeah, so first, I believe that everywhere where a high level of technology is required, that's where, unfortunately, there are less startups, which is obvious. So on the other hand, direct distribution, for instance, is where most entrepreneurs are starting, even if they are kind of pivoting. But we see two opportunities. Again, the new risk and more generally, everything around underwriting. So either smoothening the current process for commoditized product. So how you manage to better assess the risk of your final customer, to price the product more accurately with always less questions. So that's the way to make the UX a bit smoother. Or how you manage to price the cyber risk, for instance, when we don't have any historical data. So that's a real challenge here. We see more and more players in that space. But again, there is still room for improvement, I believe. And the other part of the value chain where we believe there is still room of improvement is what we mentioned, claim management. It's highly human right now. Hence, if you'd like to replace or supercharge agents right now, you need to be very strong in terms of technology. And again, if we take 10 years of Insurtech in Europe, only around 10% of all rounds announced in that space are in the claim space. So definitely, you mentioned Shift as fraud detection. That's obviously a leader in that space. There is Tractable as well. But beyond these two names, there are plenty of opportunities to revamp and to supercharge the claim process, which is highly costly, I would say, because it's related to the loss ratio that JC mentioned at the very beginning, which is right now a real challenge for a few public Insurtech companies, but for insurers as well.
Great. I agree completely on the claim side. So there's lots has been done on the D2C side to make the flows and so forth. But it's really the brick that needs to be cracked now, and needs to be cracked across Europe, across different lines, and there's a huge business to be taken there. And honestly, the legacy players, they're fighting, but it's very hard for them to do this. And you need a mix of very dynamic and lots of different tech stacks, and startups are perfect for that.
Great. We're out of time, but I do want to ask JC my conclusion question, which was if you would start Qover today, what would you do differently with all the things you've learned in the last few years?
But since we really pioneered in that space, we've taken all the right and the wrong turns. So that's the truth. That's building. It's called building a company. I think it's a good question. Many things, and at the same time, we kept exactly the same business model. So we didn't pivot. We really believe in our business model. It's just that in B2B, it takes a bit more time. It's like a diesel engine, a company, instead of a D2C startup that can show very high growth very quickly. What I feel now is that diesel engine that really starts taking off, and we start really have explosive growth now, and that's very stable. So it's B2B, B2B2C is the best decision we've taken. It's just that it takes a bit more time as an entrepreneur to build a company in that sense.
Great. That means we're out of time. I'm very happy that I picked this topic as sort of a separate panel, because I think it's a fascinating space. I agree with JC. I think there's lots of growth ahead. We are sort of where we were 5-6 years ago in the general fintech space, indeed. Thank you so much for taking the time and sharing your insights. And I wish you a nice ending of the day.
Thank you.
Have a great day. Bye, Florian. Bye, Robin.